Hello and welcome to another edition of the Retail Scoreboard, a podcast produced by the Retail Score. My name's Wayne Rigney, co-founder of the Retail Score. Happy New Year, happy 2026. It's January, early January, and we're here to talk about how trade did over the all-important Christmas trade period. A reminder, the information we're using today is compiled from thousands of retail stores who use the TRS services. The data is collated, anonymised, and pulled together to give us a set of results. The focus is on the specialty retail sector, and if you're a retailer out there wanting to see this data in much more detail, reach out to us via our DMs or directly via theretailscore.com. We can have a chat. Now, let's get on with the results. I'm going to start by saying, if your December didn't go to plan exactly as you thought it might play out, you're probably not alone. I'll get to the headlines first. Like-for-like sales over the course of December were up. We're showing a like-for-like sales growth of around 3%. Now, that's a nice, healthy number. You know, I think overall, people would be very happy with. A few things that were interesting. Sales volume was actually at 1.5%. GP, and you hear me say all the time, GP came in higher again this month, perhaps not as much growth as we've seen in other months this year, so only up 0.2 percentage points, but overall that meant GP dollars was up 3.3% against a higher average sell price, a higher average transaction value, and actually a 1.9% growth in transactions. The interesting thing was that discount dollars grew by a significant amount. There was a lot more discounting, and actually it was up 1.7 points. We're going to drill into that a little bit more. That was surprising. There is a little bit of calendar shift going on here around when Cyber Monday landed this year v last year, but let's not let that muddy the waters. Overall, more discounting. Now, in terms of timing, it was really we have calendar shift all the way through. I'm going to say for many retailers, it was a late Christmas and a booming Boxing Day. That's the sentiment that we've seen through our numbers. So a late Christmas, perhaps a softer Christmas for many retailers, but a booming Boxing Day. In terms of channel, I think here's where it gets really interesting. Exceptional growth through online, 12% up in December. Big Cyber Monday, which we saw on the last podcast, feed into some really significant results. Concessions up 8.5%. Now, concessions have been dragging the chain all year, so that's a really good number for the concessions, DJs and Myer concessions. Outlet, modest growth. Really disappointing, though, were the physical standalone stores, which is the bulk of this index. Still about 2/3 of the volume that we track is through physical stores. Like for like, only up 0.1%. So virtually flat year on year through that all-important December trading period. We're going to come back to that in a minute. Just a little bit on the state basis. Western Australia, another solid month, up 4.7%. Echoes what we've seen in previous events. Queensland had solid numbers as well. Again, we've seen this in previous years. New South Wales soft. Vicky, disappointing. Victoria down 0.6%. Physical stores. And Tasmania, South Australia, ACT all struggling. But, you know, the headline news there is WA, Queensland, those two states doing it again well. New South Wales just okay. Vicky struggling. And that obviously dragged the national result down. But I want to come back to this Christmas trade period and really dissect what happened, because to see online growing at 12%, whilst physical stores say basically flat, that has bucked a trend in recent years, and I think it's worth us drilling in and seeing what went on. If we decompose channel by week through those 5 trading weeks, so 1st of December through to the 4th of January, that first week included a little bit of Cyber Monday, and if we look at the growth rates through that, online saw consistent sales and actually a big surge that second week of December, up 15%. And then again, another massive surge in online during the post-Christmas, that last week of Boxing Day. Huge growth in those numbers. But really consistent growth all the way through. And it's very, very surprising. 9% was the lowest growth rate that online achieved, but 15% in that second week of December. You compare that to standalone stores, which saw, was flat, -2 on the 7th of December, -3 the following week, a bit of a calendar shift going out, late surge in the last 2 weeks, did better certainly in Boxing Day, but really soft. Concessions, on the other hand, modest growth all the way through for those fashion brands in particular running concessions in DJs and Myer, with some growth in the last couple of weeks there. So big jump in Boxing Day sales in those concessions. So the message here is significant variation in growth across the channels. Christmas came late, very late for standalone stores. It did land for some, but if you saw your physical stores not hitting the mark, you're not alone. In fact, over 50% of the physical stores in our network saw a sales decline in December. So not such a merry Christmas for those retailers running those physical store networks, and over 50% in decline was a number that truly surprised me. I was anticipating a 1% growth. I thought 2.5-3% growth for the industry overall. I did not expect all of that to come from online and none to come from physical stores, but that is what happened. And the effect of that is very significant. We've seen a 1.5% share of trade shift from standalone stores to online over the course of that cycle. So in 2025, online had 20%, 20.5%. It's 20.5% share of trade. Physical stores had almost 65%. Physical stores have dropped down to 63.4% and online virtually up to 22%. So that's a 1.5 point shift between the physical standalone stores to online. This mirrors what we actually saw earlier on in the year during the end of the June quarter, that end of that Mother's Day into that end of financial year sales cycle. And, what that is really pointing to or really highlighting is that sale events are increasingly being driven by that online channel. Okay, when we're seeing a clear separation in terms of channel performance around sale versus full price, and that's also reflected in the discounting. So you can't help but look at discounting, and I was really surprised by this, but discounting in online has gone from 29% in 2024 through December up to 32%. And actually, in the last 2 weeks, it's peaked to an all-time high 38% discount in online. That's the largest we've ever observed in that channel. Compare that to what we saw in standalone stores. All through the early part of the Christmas trade cycle, very little difference in the discount, maybe 1% higher. Retailers did not shift their discounting strategy in physical stores, but they had a marked shift in their discount strategy in their online stores. And that started in that second week of December, and it flowed all the way through to Boxing Day, where there are now really deep discounts. And what we're seeing here, what this really has done is cement the relationship that has really been established throughout 2025. And that is that the physical standalone network has really become the strategic channel for selling full price product, and the online channel has become a discounting and markdown channel for a lot of specialty retailing. And I think to see the depth of discounting that we've seen, particularly in the last 2 weeks, but actually through the peak Christmas trading cycle really has reflected what has really been happening throughout the course of the year. Now, also interesting is that GP managed to hold up during the cycle. So some of this is quite strategic. And I think a lot of retailers have taken the view that what's going on in if you can't beat them, join them against the online pure plays. Australia is obsessed with discounting, obsessed with offer. We've educated our consumers to think like this. And so we're going to have to run a two-tier strategy between physical stores trying to push full price product to the consumers willing to do that versus a discount and markdown strategy driven at the online consumer who's looking for a bargain. And I don't see that changing in 2026. If anything, I suspect it'll accelerate. And probably accelerate off the back of what many people have seen through 2025. So how did this Christmas result stack up against expectations? Well, if your Christmas trade did not meet your expectations, you're not alone. 72% of the retailers that input a store target or a sales target for their stores, 72% of those brands missed that target in December. That's a big number. And if you look at it on a store-by-store basis, 2/3 of all stores did not meet the target that their brand had set for them. That's a big, big miss. So I'm saying that there's probably plenty of retailers sitting there in January doing a bit of navel gazing, saying, gee, we got it wrong in the physical stores. Now, maybe you made up for it through that online channel growth that you weren't expecting. But, you know, that's a tough number out there for those running physical store networks. And I suspect that there needs to be a resetting permanently of expectations given what the consumers have shown us they're willing to spend. And it's really noticeable back in that share of trade report that Christmas and to some extent Mother's Day into end of financial year, they've typically still been more trade going through physical stores than online than other parts of the year. That's gone. That has absolutely gone. And so I think there's going to be some target resetting. I think there's going to have to be a different weight of focus around the channels in light of what we're seeing. How does that put us for the year? Up 2.3% for the year to date, not bad. 2.5% for the quarter for December, pretty good. Not great for standalone store operators because all that growth's coming out of physical stores, out of online. Physical stores for the year, you know, as I said, tough. For the quarter, only up 0.2%. And that is the message here coming out of Christmas. So driving any meaningful growth from physical stores is going to be as tough as it has ever been. And I think for many retailers, that is fuel for thought as they plan out 2026 and beyond. So that's it for the Christmas review. I hope you don't mind me wearing my Christmas polo, but you know, it's a hot, sticky Jan. We got to do what we got to do. And there's no point being there's no problem being a little bit casual first week back from work. I'll be back in the shirt with the buttons in due course. But for now, I'm going to sign off. Have a great 2026. We'll see you soon. Bye for now.